Welcome to Build with Bitcoin. I'm co-host Israel Muñoz. Co-host Lynne Bairstow and I today have for you the highlights episode where we try to summarize the past 5 episodes so you don't have to necessarily listen to each one to get the main takeaways. This way you can kind of go back and pick your topic of interest. Lynne, so what are we looking at here?
Yeah. Hi, Israel. It's like I love our highlight episodes. It gives me a chance to kind of go back through the last 5. It feels like we're learning so much as we go along, and there's so many interesting companies. And as you and I were talking in the kind of for preparing this episode, we have a conversation about block space with Bob Burnett. And then we have 4 different episodes with founders, all very early stage, but all working on really innovative technologies that are part of the Bitcoin protocol stack. So I think we're expanding kind of the parameters of what we see being built on Bitcoin and some of the use cases. So it's an exciting episode with a lot of diversity in it.
Yeah, certainly. We were just kind of speaking to that, right? That the different startups that we have on, apart from Bob's deep dive. They all are working on a very different part of the technology stack. So it's very interesting to see how this technology is kind of opening the doors for such a different array of business models. Totally agree. Well, I guess before we get into the startup side, let's start with the deep dive episode. So we've done one of these before, and the last one we did was on the Liquid network. These deep dive episodes are meant to just provide, precisely as the name implies, a deeper look into a specific topic that we think is important or misunderstood or needs more attention. So in this deep dive, we had the immense pleasure of having Bob Burnett on the topic of block space scarcity. For those who maybe after the episode, by the way, are also interested in learning a little more on what Bob is doing with his businesses, one of our very first episodes was with Bob that you can go back and listen to. But this topic was specifically about block space scarcity. So maybe starting there, what's block space scarcity, Lynne?
Yeah, this is a topic that I've really paid attention to thanks to Bob. And I think he and I had a conversation in Austin, and it was the very first time I'd ever even heard about the concept of block space scarcity. And I think to your point, it needs more attention. It's not understood, and we want to provide more education on it. But, as we see more and more people, MicroStrategy buying, large amounts of Bitcoin. We see it talk about nation state adoption of Bitcoin in their treasuries. And so everyone's talking about the accumulation of Bitcoin and that Bitcoin itself is scarce, but also in the future, the ability to transact with Bitcoin will depend on access to block space. And so block space is your transactions that are processed in block space every 10 minutes, according to Bitcoin, are kind of controlled by the miners. So the miners actually, place a template of transactions inside of their bid to mine the Bitcoin. And if your transaction is not part of that, then you could be left out of being able to transact on it. And so we are seeing more transactions than block space right now. And I think Bob had mentioned it had been a couple of years that the mempool, which is where the transactions reside until they're finalized on the Bitcoin blockchain, are processed. He was just really speaking about the importance of sovereign nations ensuring that they have access to block space, and that being almost as important or more important than acquiring Bitcoin as part of their treasury. So, as we envision moving toward more of a Bitcoin Bitcoin as a native global settlement layer or currency, that having access to block space becomes really critical. And so the conversation, I don't know, Israel, do you think I captured that correctly? Or do you have anything to add about what is block space?
Yeah, no, I think you put it perfectly. And I mean, I guess maybe just to add context in different words for maybe some people who might not be as familiar with Bitcoin specific language when we talk about mempool and all of this. I think just very conceptually, we're all pretty familiar, or there's plenty at least of even traditional media coverage on how Bitcoin is a scarce asset, right? So the digital gold comparisons and all this talk about, hard money scarce assets. That's the concept that I think is easy to understand. And what you were just describing, Lynn, is put another way. Bob was mentioning we've already had 2 years where there's essentially a backlog of transactions, right? So there's one block every 10 minutes in Bitcoin's time chain or blockchain. That's kind of validating new transactions into the history or this ledger of the Bitcoin network, right? And so that block is, to Bob's point, scarce. I mean that the space in that block is also scarce. It's also hard. I don't know how else to put it, right? But yeah, I mean, I just wanted to put it in a slightly different context for those who aren't familiar. We're talking about that ability to actually tag on your transaction to the next set of validated transactions globally. That space, and this is, computational, it's a, specific amount of data that's going into that, but it's almost like a shipping container. You can only fit so much into that, right? And that backlog that Bob was speaking to, 2 years sounds like it might be, a permanent state. We might not get to a fully cleared backlog of transactions. This has some very big implications, which is all mentioned in the episode, as far as how do I access the network and ensure that, and maybe for a nation state or a business or perhaps even an individual, how do I ensure that I actually have access to this network, right? We're kind of currently used to just being able to bump up the fee on our transaction, which is still, pretty irrelevant right now, given the size of a transaction. I mean, if I'm paying $5 on a, $5,000 transaction, it's negligible, right? And if I have to pay $1 or $2 extra to bump up that fee and make sure my transaction is cleared, people aren't used yet to this problem of block space being scarce and potentially a lot more expensive.
Yeah, and I would just encourage everyone to listen to the episode for the full details on it. But I think what's important, that from our perspective and talking about Build with Bitcoin, is this does a couple of things. I mean, it really it shows business opportunities related to this. And so, there will be probably a financial market related to block space, because that will, you might be able to pre-buy block space, or you might be able to do futures on block space. So it just creates a really exciting opportunity that I think not many people are thinking about. And it also really talks about the importance of miners and where, you really want to make sure that we continue to have a distributed mining community where we have more and more miners throughout the world, that you don't have, concentration of mining entities that control what transactions are in the block space. So these are big questions to think about that I think Bob really explains perfectly. And I will say that after the episode, I went ahead and I bought a BitAxe miner to become part of the distributed mining community, because it just really hit home on how important this is. And so I don't know that my little BitAxe will ever be able to ensure my access to block space, but, at least I feel like I'm doing my part to be a part of the decentralization of block space.
Yeah. And Bob gets into a lot of these nuances too, right? I mean, to your point, Lynn, on, having maybe a tiny portion of, of Bitcoin mining hash rate there plugged in. I mean, it may be completely irrelevant, but Bob also does speak to certain cooperatives, for example, that he sees playing out. I mean, kind of different scenarios where it will be likely that participants will kind of do their part to ensure they have some sort of meaningful access to the network. And I mean, going beyond individuals, Bob does a great job illustrating how, and we actually see it playing out right now, how this in geopolitics is also going to continue to be a very, very sticky point, right? I mean, if Bob uses the example of Taiwan, I believe, having 1% of GDP, and how he would basically recommend Taiwan have 1% of global mining to ensure that they aren't ever economically forced out of the network, basically. And there's a lot behind that Bob does a great job explaining, but it's an episode very worth listening to, because it has big implications and kind of paints a very different picture than what we're seeing today in the Bitcoin network, right? As far as these dynamics and even where the fees come from. Bob goes into the fact that currently most revenue, for a miner comes from the subsidy, right? As opposed to the fee. The fee is a very small amount. And Bob basically gets into the fact that he sees that completely flipping in, I think he used the time frame 5 to 10 years, but that's within the next decade, right? And that's not very far away at all. Global mining revenues for the Bitcoin network, it's mostly all coming from subsidy as of now. And what Bob is alluding to is that you basically in the next, 5 to 10 years could see these portions of the revenue completely flip-flopped, right? Which is, which again ties into some of the other points that we've been making, right? This will likely create new derivatives market. It will create new incentives, geopolitics, and for pools, for miners. I mean, all across the board, it's going to change things.
Yeah, I think for anyone I like to call Bob the Wayne Gretzky of Bitcoin because he's always thinking about, where things are going instead of where we are today. So I think anyone who has an interest in that perspective, it's just really a valuable episode to listen to because it does point to who should be looking at owning hash rate or mining facilities in the future, and or to get involved in partnerships with them, and why I think for any of the entrepreneurs listening, I think it also can spark some interesting business ideas too.
And then we had 4 other startups, each working on very different niches within the Bitcoin technology stack. So where should we start, Lynne?
Yeah, I mean, just a rundown of them. We had Swapido, which is a payments network unique to Mexico, but I think, it just allows the ability to use Bitcoin in day-to-day transactions in an easier way by integrating it into the Mexican banking system. But I think it really is a template for how Bitcoin can become much more usable globally. We had CASCDR, which is the integration of AI in Bitcoin, which is a topic that's near and dear to my heart. And then we have Joltz, which is stablecoins on the Bitcoin platform using Taproot assets, a very new technology. And stablecoins, I think, are probably the biggest use case in digital assets that exists. And then AnchorWatch, which is a newly released ability to insure your Bitcoin through Lloyd's of London and just have a lot more confidence in securing your custodialship of Bitcoin. So a really wide variety of startups. Where should we start, Israel?
Well, let's start in the order you went through them, Lynne. So let's start with Gustavo, which is a startup based out of Mexico, Swapido. So they are providing an off-ramp basically for Mexico and LATAM. It's great to see some of these early stage companies also tackling some local problems, right? And so Swapido, they again are an off-ramp. So that just basically means being able to sell your Bitcoin. So Gustavo does a good job explaining, the origins and of course where this all comes from. But he was essentially an expat. He from Canada, moved to Mexico and realized that he'd like to begin using Bitcoin in his day-to-day as far as being able to spend his Bitcoin. And so we have Swapido, right? Very, very new company, but they're off to a great start. And I guess what else would you highlight there, Lynne?
I think it just, there's so much that is talked about in terms of the price of Bitcoin and Bitcoin as a store of value. But the real use case in many parts of the world is actually transacting in Bitcoin. And so it's not always easy. I mean, you need to have off-ramps. I think what Gus has built with Swapido is really important and a great model for how that can be implemented, in other countries. And almost every country has its own unique banking system. And so to easily integrate this with the SPAY banking system, which is like an instant settlement banking system inside of Mexico, has been just a great thing to see. and just how the community has come around it and just the model. And Gus is also a second-time founder. So he worked on a Bitcoin startup that was acquired in Canada. So he's super young, but just a second-time founder, and just how he thinks about, solving a problem that he had and then creating a company around it. So I really enjoyed that episode. And I think founders like Gus are really worth paying attention to, because you've got somebody who's Bitcoin native from early on, and how they're looking at the usability of Bitcoin over the long term and creating tools and solutions for problems that somebody who's Bitcoin native is confronted with. So I like that big picture perspective of, may not be Swapido's precisely, but I think anyone looking at this ecosystem should look at founders like Gus and solutions that they're creating as potential for what the big startup ecosystem built on Bitcoin would be, would represent.
Yeah, no, that 100%. And he has a very deep knowledge of Bitcoin's technical stack as well, which of course, is kind of a prerequisite if you're going to plug into the Lightning Network and, some of the things that he's doing. But very clever workaround as well, as far as plugging into the domestic real-time payment system in Mexico. And, what you mentioned there, Lynne, is interesting, of being Bitcoin native, because just kind of came to mind here as you were talking. I think many people currently in their 20s or 30s who have been paying attention to the space, of course. But there is this inevitable trend of, we're going to continue seeing more Bitcoin native generations, right? This isn't something you reverse, right? It's a better technology. It's more efficient. It's a better savings technology as well on the, monetary hard asset side. Once you see it, you don't unsee it, right? And to your point, Goose is a second-time Bitcoin founder, young, very clearly sees where this is going, working hard at it, flexible, low time preference. So I agree. Swapido is one to watch.
Yeah, and then moving on to CASCDR, and both with CASCDR and Joltz, both of these founders actually came from larger corporations, and then moved into the Bitcoin space as they became more attracted to it for different reasons. And Jim, the founder of CASCDR, his journey is really interesting, because he moved to Austin, became involved in Pleb Lab and the community in Austin there, which is a really deep and supportive Bitcoin community, and started CASCDR, which is almost a marketplace of tools that integrate AI and Bitcoin, which is something that I really think is one of the biggest opportunities in Bitcoin and companies being built on Bitcoin. But CASCDR takes different modules. They built a number of modules inside of their marketplace, and allows you to, use open AI sorts of LLMs or them specifically without the need to set up an account. So you can set up an account through CASCDR. But, his whole vision of it is that we will increasingly be using AI agents, and we will increasingly be utilizing AI in order to improve efficiencies, but we don't necessarily want to be tied to the big companies that are now creating these AI models. And so if we want to have more sovereignty and more privacy in our integrations with AI and AI agents, that marketplaces such as what he's building become really important. And I couldn't agree more. I just feel that, and you spoke about this in the episode, that you've avoided OpenAI because of your feelings about the company. I have the same feelings about the company and hesitations, but I have used it. So it's like, I'm so grateful that tools like CASCDR are being built that allow me to access some of the potential of these AI LLMs, but without necessarily, releasing all of my personal information or what I'm looking for. So he's got a great model. He's also doing some custom work with companies that want to see how they integrate AI. I think Bitcoin, it's clear it'll be the native currency of AI agents. The Satoshi's immediate settlement, the micropayment aspect of Bitcoin, it just is so obvious to me. But it's also very early. And so it's exciting to see someone like Jim also see this opportunity and start building the tools that will help facilitate it.
That second layer is pretty interesting. And Jim, gets into it in the episode, of course, the micropayments aspect that you also bring up quite a bit, Lynn, that you've kind of seen coming, from miles away, where I think we're maybe not necessarily there yet. But and to that point, actually, Jim, it's interesting, he had admittedly says as well, I am very early still, right? I mean, we're not at the point where this is scaling. Bitcoin native AI payments. I mean, AI and Bitcoin are natural fits, but he says so himself. I know that the technology stack I'm building is early, but to his credit, I mean, he's getting a head start on this technology, and it's hard to say. I don't know whether we have more sophisticated AI agent and bot interaction in Bitcoin in, I don't know if that's 2 years, 5 years, or what, but I think we're all very conscious of the fact that technology is moving at a very rapid pace. We already have workable AI. We already have workable Bitcoin, of course, as far as, the second layer payments aspect. How it evolves, we'll see, but it's a very interesting, and the I guess clear example of this to kind of land it for some people, because this can sometimes sound a bit abstract, but so CASCDR allows you to essentially deposit a budget in sats or whatever budget you have of Bitcoin, to use the CASCDR AI services, and it's kind of a pay as you go model, right? Which, when you kind of extrapolate that to other implications for other subscription models, or many of the things we use in our day-to-day now that maybe would benefit from pay-as-you-go services, it definitely gets you thinking about where this is heading.
Yeah, and I also really love his mission of, in addition to protecting more of the privacy of the sovereignty of your own information when interacting with AI and these providers of AI services, the other thing is just opening up the access. So in most parts of the world, people don't have a credit card that they can put down and subscribe for a monthly fee. So they're, they have to use the free versions or the limited versions. And so, by having an access to it through something like CASCDR, where they can set a budget and interact with the AI tools and pay only for what they use, I think is also just a fantastic payment model that just opens up the accessibility to these tools in a greater way. So I really applaud that aspect of it too.
Yeah, you're totally right there. And I mean, I think the payments and micropayments aspect of Bitcoin, what many of these layer 2 solutions are solving, is when you look at it through a different lens, not just, let's say, oh, this is more efficient technology, but what you're really getting at is that access, right? I mean, it's allowing, maybe those who are shunned out from the traditional system to, with small quantities or small transactions, still be able to plug in and, in a practical way, use Bitcoin's censorship-resistant properties. And I guess going off of payments and layer 2s, the next one we had on was Ian from Joltz. So Ian, we had a quick highlight of what Joltz is working on as a result of the pitch day competition in Nashville this year.
Build with Bitcoin is a proud affiliate partner of River. River is a financial services company that allows you to purchase, sell, and transfer your Bitcoin all through a great suite of products, high security standards, and as of recent, even allowing you to earn a Bitcoin yield on your US dollar cash deposits. For a personalized onboarding experience, go to partner.river.com/buildwithbitcoin.
He was one of the 3 companies that won the pitch day at Bitcoin 2024. So we had very briefly just, covered what they were working on, but this was a full episode dedicated to Ian's mission at Joltz, which is on the payments and asset issuance side. So he's really starting to look at stablecoins as a core part of the Lightning Network stack. So I guess, what were some of your takeaways there, Lynne?
Well, number one, I think it's really interesting. I mean, the whole stablecoin topic, which is a little bit controversial inside a Bitcoin community. I mean, some in Bitcoin feel that stablecoins are a distraction to the growth of Bitcoin. I don't take that view. I think because living in in a country where currency has devalued and being involved in the LATAM region and just understanding the value that stablecoins provide, having the ability to hold assets in a currency that'll hold its value, number one, and that is easily you can transact 24 hours a day, 7 days a week. I think stablecoins just provide an incredible tool that people outside of the US, Canada, European markets might not appreciate the benefits that it provides for the rest of the world. But being able to issue that on the Bitcoin blockchain, stablecoins started on the Bitcoin blockchain, and then they moved to other blockchains that they felt were more efficient or more able to handle the transaction volume. And so what Ian and Joltz have done in being able to provide a toolkit that anybody, because they're actually interacting with Lynne out of Brazil to connect stablecoins on the PIX system. Their stablecoin is called DPIX, but PIX is the largest financial transaction network in Brazil. It's the dominant one. And it gives an optionality of opting out of the central bank digital currency of Brazil into a Bitcoin-based stablecoin, which I think is a really important option to provide. And Joltz is the kind of the underpinning of that technology. So it can be adopted by many other issuers or issuers that it may not be a stablecoin, but it might be some sort of a rewards program, which is how they started. But the number of use cases I think are phenomenal, and just the market potential is massive. And just talking about stablecoin transaction volume now exceeds Visa, MasterCard in just the few years that stablecoins have really been growing. So I just see Ian and Joltz taking, just really being attuned to the opportunity, taking this brand new technology on the Bitcoin protocol, the Taproot assets, and just exploring it and, and providing the tools where it can be easily used by other companies to issue their assets. I don't know what your takeaways were, Israel.
Yeah, no, I mean, I think you hit the main points there. I mean, they're creating a great technology stack that's easier for businesses to plug into. So you don't have a cost for integrating. I mean, from Joltz themselves, right? Of course, there's an effort associated with that, but I mean, the tool, it's kind of one of these companies or startups that they're working on everything that goes on behind the curtains, right? It's kind of the plumbing behind the scenes, which is crucial to making this technology work and scale, right? So they're doing a great job at providing, their software developer kits and what they're doing with APIs and their work with Taproot and bringing stable coins onto the Bitcoin Lightning technology stack. Ian, also mentions he believes that some of the other bigger stablecoin players will in the near future be looking at this because it's now actually a viable option. Whereas right now they use other blockchains for their stablecoin needs. But he says ultimately, and that's been for quote unquote good reasons. It's basically been because it hasn't really been too viable or logical to do so on the Bitcoin stack until now. So I mean, their launch with Lynne that you were mentioning is kind of it's kind of a pivotal moment for Bitcoin's maturity because, and we'll see how it all plays out, of course, but this is the first time that you actually have a stable coin issued on Bitcoin's Lightning and Taproot technology stack, right? So, to be seen, but yeah, other than that, I think you hit on the main points.
Yeah, you bring up a really important point, Israel, and I think it's just that, some people have the misconception that Bitcoin is not, you're not able to innovate on Bitcoin, and you are, and there are developments, not necessarily on Bitcoin on the base layer, but Bitcoin on the layer 2s and some of these other technologies that are a part of the Bitcoin protocol. But it's enabling enormous creativity and enormous innovation that is possible, but on this solid base layer that is truly distributed, that doesn't have central ownership, that has proven its stability and uptime and confidence. So, I think more and more entrepreneurs that even are thinking about anything in Web3 or digital assets, that they really need to pay attention, and the investors too need to pay attention to what is possible on the Bitcoin base layer. And it's just, we're seeing every day just innovation occurring on that. And that's really where I believe it should be occurring.
Yeah, absolutely. So we're starting to see the some of this come to light, right? Which is exciting. Okay, well then I guess that takes us to the last episode of this set, which was with co-founder Becca from AnchorWatch. A very different model and use case for what they're tackling, but AnchorWatch is certainly one to watch. I think they're providing the first of its kind insurance and custody packaged into one, with the Lloyd's of London cover holder approval as of recently, which that means quite a bit. But Lynne, where should we start with AnchorWatch?
This is and this product launched the week that we talked to Becca, and so which was exciting. I think it's a product that's launched in the market couldn't have been more perfectly timed because of the acceleration in Bitcoin's price and the maturity of Bitcoin adoption in terms of institutional layers, that people are really starting to look at this, where I think the early Bitcoin buyers, either because of the price and what it meant in terms of their financial stack, or just not being as attuned to traditional financial services, would not have paid as much attention to insured Bitcoin, insuring your own Bitcoin. It's really hard. It took them 2 years to solve this problem and to get all the pieces correct. But during the course of that journey, they've come up with a solution that really helps people feel secure about their Bitcoin on an insured basis. And a couple things that were notable for me in the conversation was just the quality of the founders. All of the founders that we've talked about are super high quality, but Becca's background and working with large corporations and Rob's technical expertise, it's a really ideal founder fit, in terms of the two co-founders of that company. And the other thing that struck me, and I think you need to listen to the episode to get the full appreciation of this, but they're talking about insurance of Bitcoin. But the other thing that really stood out to me was it has an option for inheritance planning, because the way they're working with the mini script and the way the smart contract works in cooperation with the insurance. I'm getting probably a little deep on it without explaining the foundations of it, but it's just for many Bitcoin holders have family situations where their spouse, partner, children, whatever, may not be as technically adept or comfortable with Bitcoin. And so it's a hard decision as when you're thinking about inheritance planning and how you leave your Bitcoin, like what does the process look like? And so usually it's multi-sig, it's having somebody else involved, and that's not always a comfortable decision for someone. The way AnchorWatch is set up, it really allows you to not have to give up details, but to let the smart contract kind of control that at the time of your passing. So I don't know. It's me, the inheritance planning aspect of that is really interesting. And I think it'll be really appealing to a number of of the early Bitcoin holders that have accumulated a large amount of net worth with Bitcoin, but don't know how to appropriately pass that to people who are less involved in Bitcoin than they are.
Yeah, to your point, it removes the entire complexity of needing to understand how to, work a private key or a wallet or any other, Bitcoin concepts. They've completely removed that complexity away from inheritance planning for whoever that passes on to. So yeah, I agree, Lynne. That aspect, and we spoke about it with Becca, is actually, I think, going to be quite successful for them. It's not their main offering really, but it's a kind of side consequence of the very well thought out product that they've built. Becca goes through this even visually, the different layers of risk mitigation that their solution provides, and I guess to highlight a couple of other things from that conversation. Before that, this is absolutely huge that Bitcoin is maturing into this,
we always talk about Bitcoin, or there's many talks about Bitcoin maturing now to an asset class that can kind of compete with the big boys, let's say, and this financialization of Bitcoin. I mean, make no mistake, this is a 100% key component to that path, right? I mean, and Becca, what surprised me as well was kind of putting numbers and context to the size of the problem we're looking at, right? I mean, Becca says that currently there is, for a close to $2 trillion asset class, there is $3 billion of insurance coverage for this asset class, right? So it's essentially uninsured. And she goes into as well, why some of the current exchanges, their insurance policy isn't one-to-one. Maybe users are depositing their funds thinking they're 100% insured. That's not the case. There's some nuances to those policies. The main takeaway is this is largely, for me at least, this is essentially an uninsured market, right? And when you put that into context too, by the way, we like to step away as well and talk about, Bitcoin's potential and how it's going to capture, a percentage of all the assets in the world. And all these assets are kind of bucketed into different categories. So, kind of thinking through that, so let's take some of the main ones. The bond market, that's a massive piece of the pie that, many can argue, and I believe as well that Bitcoin is going to capture some of that, a large portion of that. I do believe bond market. So you could say it's basically insured because you have the government fiat as the backstop, right? That's kind of why they're the risk-free asset, right? Treasuries. That you could basically say is fully quote unquote insured. Take fine arts and jewelry, which is also a category in some of these graphics we've seen as far as Bitcoin's addressable market. That's also an asset class, to call it that, or a category that has some portion of that insured. Take cash itself, right? You have FDIC insurance in the banks. My point, what I'm getting at with all of this is Bitcoin's addressable market, they're all, for obvious and good reasons, they're all insured asset classes, right? It is a very, in a way, actually alarming outlier that there is no that Bitcoin has, and it also speaks to just how powerful Bitcoin is, right? It's grown to a $2 trillion asset class with being basically uninsured, right? So what AnchorWatch is doing, I think, is it's a massive win for the industry. And they're, to your point, Lynne, they're very seasoned founders. What they've built is impressive. And having the Lloyd's of London approval, for those who might not be as familiar with the insurance market, they're the golden standard as far as underwriting. These are not people who are taking or cutting corners as far as risk distribution and risk mitigation. So I think AnchorWatch is a massive win for the industry, and what they're working on seems, it just seems very well thought.
I think, bringing them all together, it just shows how, these are 4 companies that are solving real problems in Bitcoin adoption, or expanding the ability to make Bitcoin usable. And the founders have solved problems that they personally have seen or wanted to have access to. Like, I'm sure that Becca and Rob looked at Bitcoin and realized that having it insured would be a much better way to operate, and instead of just holding, individual hard wallets throughout the world. And in every case, these are founders who are creatively looking at solutions, used the Bitcoin protocol and tech stack to find solutions that meet their problems, and all in the end result of making Bitcoin more adaptable, more usable, and more secure. So, it was an exciting group of 4 founders, I think, that we had, at all very early stage.
Great set of 5, take your pick. Again, block space scarcity. We had an off-ramp in LATAM, AI and Bitcoin,
payments and asset issuance, and insurance. So take your pick as far as topics of interest. Have a listen. They're all to their own merit, very worth it. And that's, I guess, that's maybe where we can end the highlights.
Yeah, I agree. And, I think the only thing scarcer than Bitcoin or block space is your time. So we hope the highlight episode helps you hone in on the episode that's more meaningful for you and that you're more interested in. So we appreciate your time and hope you found this a benefit. Thanks for listening to the Build with Bitcoin podcast. If you found benefit in what you heard in this episode, we'd truly appreciate it if you would like, share, or leave a comment on whichever platform you're listening, as this helps others find us, which is especially important for a new podcast. And as a reminder, our content is intended for educational and entertainment purposes only and is not to be considered investment advice or a recommendation to invest in any company or asset mentioned in the podcast. Build with Bitcoin is a proud affiliate partner of River, a full-service, 100% reserve custody, Bitcoin-only financial services company. For your next Bitcoin purchase, use our exclusive link, partner.river.com/buildwithbitcoin. Thank you sincerely for being a part of the Build with Bitcoin community.